Welcome to the deep dive. Today we're plunging into a part of the financial and legal world that's often, well, pretty hidden from view for most people.
Yeah.
Litigation funding.
It's a really fascinating area, yeah, and one that's changing fast. Our guide for this deep dive is an excerpt from Accessing the Hidden World of Litigation Funding, featuring insights from Peter Murray of 3Pay Global. They're right in the middle of it.
Okay, right. Let's unpack this then. Our mission today is to really understand what litigation funding is, who traditionally played in this space, why it seems to be growing so much right now, and maybe most interestingly for you listening, how someone outside that kind of institutional bubble might actually get involved these days. So get ready to think about legal cases, not just as, complicated disputes, but maybe as a whole different kind of asset class.
That's exactly it. I mean, at its core, litigation funding, and you'll hear it called litigation finance, sometimes third-party funding.
Right.
It's essentially providing the money needed to cover the costs of a legal case.
Yeah. Which
Which can be significant.
Right.
And in return, the funder gets a share of the winnings, basically, if the case settles or wins in court. Peter Murray calls it, a fairly new asset class, relatively speaking, but one that's definitely gaining traction.
And this wasn't something historically that just anybody could jump into, was it? It sounds like it was quite a closed shop.
Oh, absolutely. For a long time, yeah, this was really just the playground for big institutional investors. You're talking major hedge funds, large pension funds, professional fund managers, organizations with very deep pockets.
And they're looking for specific kinds of returns, I guess.
Exactly. They're looking for alternative investments, things that aren't necessarily tied to the stock market, and they can offer potentially high returns.
And the excerpt mentions some pretty eye-popping returns, potentially doubling their money within 2 years. That sounds, well, almost like gambling. Is it just luck?
Well, that's a really key point from the source material. He's quite clear it's not just luck. Achieving those kinds of returns consistently, it comes down to a very rigorous, almost scientific way of picking cases.
Okay.
It requires, yes, a deep understanding of the legal system, but maybe more importantly, being incredibly selective. The successful funders, they aren't just rolling the dice, they're doing intense due diligence, picking only what they see as the strongest claims. If a case doesn't tick all their boxes, they walk away.
Right. So if it's been so strategic and potentially profitable for these big players, why is it still kind of under the radar or, inaccessible for individuals?
That really is the hidden world part Peter Murray talks about.
Yeah.
His view and really the motivation behind his firm, 3Pay Global, is that this space should be more accessible. He actually set up the firm specifically to try and structure this kind of opportunity so individuals, not just massive funds, can participate.
Right. And when you say accessible, what sort of money are we talking about? Are we still talking millions?
That's probably one of those surprising bits, actually. The excerpt says you could potentially get involved with minimum investments as low as £10,000. So the goal seems to be to sort of demystify it and open the door for people who haven't traditionally had access to these kinds of alternatives.
Okay, now this is interesting. Despite being a bit hidden, is this market actually, growing? Is it significant?
Oh, it's not just growing. It
Wow.
seems to be expanding exponentially.
Yeah.
The whole idea really took root in places like Australia, the UK, back in the 1990s.
Right.
But from there, it's gone properly global. You see it established now in the US, Canada, across Europe, down in South Africa, even starting to emerge in India and Nigeria as their legal systems kind of adapt.
Wow, okay. That's a huge footprint. Do we have any, hard numbers on the size and where it's heading?
Yeah, the data really backs up that growth story. There was a 2024 report from a U.S. firm, Custom Market Insights. They put the global market size at about $12.2 billion back in 2022.
Okay, substantial.
But here's the really interesting part. They're projecting it to more than double, potentially hitting around $26 billion by 2030. That kind of forecast, it signals a lot of confidence in growing demand, doesn't it?
It certainly does. Okay, let's maybe zoom in a bit then.
Yeah.
Peter Murray's firm, 3Pay Global, you said, focuses on England and Wales. How does the funding actually work, practically speaking, in that system? How does it change things?
This is really key to understanding the value proposition here. He points out this really striking statistic about the UK's civil court system, specifically England and Wales. Only about 10% of cases actually go all the way to a final trial.
All right, only 10%. So 90% don't end up in a trial. That seems huge. Why? What happens to them?
It's fascinating, right? And according to Murray, it breaks down roughly into 3 equal chunks. About a third just collapse because the claimant, that's the person bringing the case, they simply run out of money. Litigation's incredibly expensive. Another third, roughly, fall away because the claimant just gets mentally worn down. The stress, the delays, the pressure, it's immense.
Yeah, I can imagine.
And the final third, they settle. They settle because the defendant, the one being sued, knows the case against them is strong. They know it's likely going to stick, as he puts it, and they want to cut their losses before a trial.
Ah, okay. So the funding directly tackles those first two big reasons cases fail, running out of cash or just being ground down by the process when you don't have deep pockets.
Exactly. Funding provides the staying power. It stops those cases, the ones that might actually have real merit, from just fizzling out because the claimant's bank account empties or their resolve breaks before they get a resolution. It keeps them in the game.
And this must be where the whole settlement dynamic really shifts, right? How does having that funding backing change the sort of power balance?
He gives a really good example in the text.
Yeah.
Let's say someone's suing for £15 million.
Okay.
Their own legal costs to get to trial might be, say, £2 million.
Right.
Now, if they win, the defendant doesn't just pay the £50 million claim. They'll probably also have to pay their own legal costs. Let's say that's £3 million in this example, and a claimant's £2 million costs. Add that all up.
Okay, 15 plus 3 plus 2. That's 20 million total exposure for the defendant if they lose at trial. Ouch.
Precisely. A very serious risk. So what's a common tactic for a defendant, especially if they think the claimant doesn't have much money?
Try and drag it out, make it expensive.
Wear them down, file motions, cause delays, make it as painful and costly as possible. They might figure, okay, this claimant only has maybe £1 million to fight this. If we make them spend more than that, the case disappears and it costs us much less than losing.
But if the claimant suddenly has funding, that whole strategy just collapses.
It completely changes the game. The claimant, now backed by a funder, has the resources to handle those delays, to meet the costs. They can stand firm. The defendant then realizes, this case isn't going away, it's strong, and we're heading towards that potentially massive $20 million loss at trial.
So the defendant's focus shifts. It's not about exhausting the claimant anymore. It's about minimizing their own potential loss.
Absolutely. Now, the incentive is firmly on the defendant to settle. They might try a low offer first, maybe £5 million, but the funded claimant can say no. So maybe the offer goes up to £8 million, maybe £10 million. Murray suggests settlements often end up much higher than those initial low balls, perhaps around $10 million in his example, because, well, paying $10 million now is a lot better than risking $20 million later. That's the power shift.
Oh, okay. That makes a lot of sense strategically. But how do the funders make sure they're picking these strong cases, the ones likely to settle well or win? What's the secret sauce in their due diligence?
This is so crucial, and it gets back to that it's not luck idea. Funders like 3Pay Global, they look for a whole set of signals, really. Things that show experienced legal professionals are already backing the case. One big one. Is the solicitor or the lawyer handling the case day-to-day willing to work on a conditional fee arrangement? No win, no fee.
Oh, right. If the lawyer only gets paid if they win, they must really believe in the case.
Exactly. They've got skin in the game. Then, what else? Is the barrister, the specialist advocate for court, willing to take it on? Good barristers are, well, they're very protective of their reputation. They generally won't touch weak or frivolous cases.
Okay, so the barrister's reputation is on the line too.
Right. And maybe the biggest signal of all. Can they get something called after the event, or ATE, insurance for the case?
ATE insurance. What does that do? How does that fit in?
So ATE insurance is there to protect the claimant. If they actually go to trial and lose, the insurance covers the defendant's legal costs, which the claimant might otherwise have to pay. Getting this insurance is a huge hurdle for weak cases.
Why is that?
Because insurers, well, their business is built on avoiding risk. They're not going to agree to potentially pay out a huge amount in defense cost if they think the case is likely to lose. So if an insurer is willing to issue an ATE policy...
It's like another independent expert saying, yeah, we think this case has a good shot.
Precisely. It's a powerful external validation from a separate financially motivated entity that the case is seen as strong, likely to win or settle well.
So the funder isn't just relying on their own judgment. They're looking for this sort of consensus from the solicitor, the barrister, the insurer, all looking at the case's strength from different angles.
That's exactly it. As Murray puts it, when the lawyer's committed, the barrister's on board, the insurer is willing to cover it, and the funder, after their own review, is also confident you've got multiple layers of validation. That's the kind of robust due diligence that allows them to be selective and, hopefully, achieve those strong results.
It really brings home that point about the fundamental gap that this kind of funding fills, not just in the UK, but potentially everywhere.
It really does. He emphasizes that point. Winnable cases, situations where someone was genuinely wronged and the law should be on their side. These cases fail all the time, all over the world, just because the claimant runs out of money or emotional stamina.
Yeah.
Litigation funding, when it's applied properly to those strong, meritorious cases, is basically designed to stop them from just dying on the vine,
So wrapping this up a bit, what's the takeaway for you listening? Why should you care about this kind of hidden world?
Well, look, if you're someone who likes to understand how different parts of the financial world work, especially emerging areas, this deep dive has hopefully, pulled back the curtain a bit on a significant, fast-growing alternative asset class.
Right.
And maybe more directly, for individuals out there who might have some capital, perhaps sitting idle, and are looking for investment opportunities that aren't necessarily tied to the usual markets. Opportunities that, with the right diligence, could offer decent returns. Well, litigation funding, especially as it becomes more accessible, might be something genuinely worth looking into. I mean, Peter Murray's firm has been doing this since 2017, apparently, successfully. So their view is clearly that it's an opportunity ready for more people.
This has definitely been an eye-opening look at how law and finance cross over in ways many of us probably don't think about. We've seen litigation funding as this powerful, growing asset class, traditionally very exclusive, but now steps are being taken to make it more accessible. It operates by, very carefully picking strong cases, backed by multiple layers of expert confidence, and crucially, it acts as this force that can really shift the power dynamic in legal fights, often leading towards settlements.
Yeah, it really can change that whole David versus Goliath picture, can it? Just by giving David the resources, the staying power to actually face Goliath properly.
Which leaves us with maybe a provocative thought for you to chew on. What are the wider implications here? Not just financially, but maybe for access to justice itself. When having capital or access to it can so directly influence the outcome of a legal dispute, does it genuinely level the playing field against defendants who used to be able to just, outspend or outlast their opponents? Something to think about. Thanks for joining us for this deep dive.